Yeah, right.
All right. Hey, Ryan, how are you today? Thanks for being here.
Greg, I'm doing well. Thanks for having me on.
Yeah, man, I'm really excited to talk to you and learn more about you and what you do for your clients. So let's jump right in here if you don't mind. Maybe tell me a little bit more about kind of what you do, what you specialize in, maybe what led you to choose this career, and perhaps how you got started.
Yeah, so I'll kind of address some of the questions you ask on the tail end, and then get to the questions you asked at the front there. So, or at the beginning. Um, so I would say that I work with my father, Ron Wyatt. He's the owner of our company, and he is a large, factor or reason why I came into this industry in the first place. We grew up, he's certainly a fatherly figure, but I would say as I started, maturing and becoming older, not only did I become naturally just like curious about what he does and in a way kind of fascinated by it, but our relationship like father and son, at a certain point in time, we just became like friends. And
Yeah.
so I just naturally wanted to kind of follow in his footsteps. So, fast forward, I'm applying to colleges. I knew I wanted to be a finance major. I don't know if you've ever made a decision in life, but you never really think twice about it. I kind of knew going right into college and studying finance that I was on the right track. I enjoyed it. I remember telling some of my closest friends in college, what my plan was after college. And this was, freshman, sophomore year. And that was, I want to become a financial advisor. I want to work with my dad one day. It felt natural. I wanted to excel in it. I remember leaning on my dad's expertise and knowledge of the industry as I got, into the later years of college. He helped me pinpoint some of the companies that I should apply to work for right out of college. He wanted me to go out and get my own experience and really determine that I liked this profession before we started working together. So that led me to
That was really
my first.
supportive of him
Yeah, yeah.
to do that for you. Make
There's
sure this is what you want to do, son. Make sure this
right,
is for
exactly.
you. Go explore yourself. Yeah.
Yeah, and different people have different thoughts. Some people say, "Hey, look, I'm going to train them, my way, bring them in right away." And other people say, "Hey, go out, get some experience. That way, when you come to when we come together, you can challenge me professionally, of course, but you kind of have a semblance of who you are in the industry." And
Yeah.
that was
Absolutely.
Ron's thinking, and I'm very grateful for that because I worked at Vanguard, I worked at Charles Schwab, all in the space of what I'm doing now, and I take that knowledge and even just like learning how those large firms operate and what they offer to their clients, it's invaluable. And it certainly made me, I think, a better advisor today. I forget, I think there was another question at the front of that I maybe did not address.
Yeah, I think. Let's see. You talked about what led you to choose this career. Maybe a little bit more about how you got started. So maybe there was something about your father. So, I mean, I think we all are inspired by our dads and our mothers too, but, as sons, our fathers. Maybe talk about maybe when you were growing up, you knew what your dad was doing. Maybe was there something about your father that inspired you? Like, is there a memory that comes to mind where you started to get curious about and interested in what he was doing that made you think, maybe acted as the catalyst for you to be like, yeah, this is really cool. I want to learn more about this. So is there anything that stands out to you?
Yeah, I remember. It sounds cheesy, and I was young, but sometimes I have childhood memories on a few different occasions of people saying, "Oh, what does your dad do?" And I was like, "Oh, he's a financial advisor." And back then, when I was a kid, I was like, "Oh, I thought that was like the equivalency of a superhero." Now, I'm not saying that financial advisors are superheroes, but that's kind of how I looked up to him at a young age, and I'm sure that had something to do with me wanting to pursue the industry, and then the fact that I actually liked it was setting goals for myself, pursuing further education, and it just felt fulfilling and motivating to be achieving things on a personal and professional level, it just re-solidified those positive thoughts that I had from a young age. But I also remember being in the car and trying to ask him questions about what he did, and basically just thinking, oh, he does something with the stock market that I don't understand yet. And the questions wouldn't go much further after that, because again, I was pretty young and didn't have a strong understanding of everything that went into being a financial advisor.
Yeah. But it's more than that, isn't it? As you get older, you realize it is definitely the stock market plays a role, but it's so much more than that.
Oh, yeah.
Let's talk about that a little bit. Maybe you could describe the kind of person who comes to you and is ready to work with you. Maybe what are they struggling with that kind of finally makes them reach out?
Yeah. So, we always say, like, we're pretty goal-oriented people. I would say that Ron would share this sentiment with me, but my personal belief is that if you're not growing, if as morbid as it sounds, you're dying, for lack of better words. And so we're very motivated to pursue and achieve personal goals. And what we found is that our client base just naturally resonates with us. It's a very easy connection, and across the board, all of them, they have their current situation, which nobody's situation is identical to another, client's situation, right? But all of them are started off at point A. They had goals that would get them to point B, and that's where we would come in and fill the gap. And again, it's the thing that we're relating to our clients on is that, we're motivated, goal-oriented people ourselves, and so are they. And it's really setting that framework for achievement or pursuing goals. And, I listen to a bunch of podcasts. I'm really big into kind of how the brain works and what motivates people. And the more you kind of learn about it and read about it, you find that constant pursuit of chasing the goal is where real happiness is created, not so much the achievement of the goal itself. And that's what we're doing on a day-to-day basis. We're setting a plan, we're measuring progress towards those goals, and helping people achieve. That's how we think naturally. That's how our clients think. And I think they get a lot of enjoyment out of actually feeling like they're taking their situation and improving it.
Yeah, I love that. So you meet a prospective or a potential client for the first time. Kind of walk me through your questioning or your thought process. Like, how do you maybe help understand or identify what their goals are? Like, what are you looking for? What do you want to understand in that first meeting that really lights you up and gets you excited about this person and potentially working with them?
I mean, it might sound cliche. If anybody's listening to this show and they've had 1, 2, 3 conversations with advisors in the past that they've been thinking about hiring, you'll hear often a good fit is important, but it is. So the first call is really making sure that mutually there's a fit between the type of help that prospective client needs and what the firm or what we specialize in as advisors. I would say the next most important thing from there is determining how open to receiving help or receiving advice or implementing advice that is given from an advisor to a client the person is. Because somebody might be the perfect fit, but if they're not open to the advice, or if they have certain biases that might make it difficult to implement the ideal strategies, it's going to be very difficult. It's going to be a difficult relationship. It's going to be hard to really make progress. It truly is like working together, the advisor and the client. And those are the best relationships. That's ultimately what we're trying to figure out in that first meeting.
So if they're open to the type of relationship where they work with the advisor and are open to the expertise and the, quite frankly, probably the leadership.
Yeah. Think about it this way. A term that we use often is delegator. We delegate, running a family owned and operated wealth management firm. There's certain things that you control fully, and there's certain aspects of the business that you delegate to free up your time so you can focus on what you do best. It's the same thing for our clients across the board. Are the clients that we work with, they're delegators. Their goal might be to maximize their lifestyle in retirement and do, spend their time doing the things that they enjoy doing, whether that's traveling, whether that's going to Florida for 6 months of the year and renting a boat, whatever it is. That's what they're focused on. They're delegating the expertise in the management of their financial situation to us. And that delegation piece is critical.
Okay, this is great. I'm loving this. Okay, so let's maybe talk a little bit about how you would approach working on a goal with a potential client. So let's say they're retired already, right? They've delegated most of the management of their finances to you, and they're like, okay, well, we want to go on a 3-month trip to like Europe or something like that. Have you ever had a client come to you with a goal like that, and they're looking to you to help them figure out financially how to make that happen? Is that something that typically a situation that you find yourselves in, that your clients kind of come to for? How do you approach that?
All the time. Yeah. I mean, so, we always tell our clients that your goals are your goals. Your goals are different from anybody else's, and we're goals-based financial planners. So what that means is that we're here to establish a retirement plan for you that's going to help you achieve your goals. Now, if at any point in time we feel or we see or the numbers show that certain goals are not achievable, rather than tell them it's not achievable and say, hey, you need to pursue this alternative or you need to go down this path instead, we empower our clients to actually make the decisions on their own. So what we do is we educate them on trade-offs that would need to be made to achieve their goals. That way, they're always in the driver's seat. They're making the decisions, but we're educating them on the workable trade-offs that will help them achieve the goals that they've already told us are important to them. Now, some clients might have resources that far support their needs, and you don't have to have that conversation of trade-offs. Their goals might be small compared to how much they've saved over their lifetime, and whatever they want to do, they'll achieve. But that's not always the case. And if that's not always the case, then absolutely, you have to be prepared to talk to them about trade-offs and show them, maybe one of the trade-offs they make is spending less. Well, how much less do you spend, and what are the results of spending less over a long period of time? You need to be able to show them that. And that's ultimately what we do. And it's not just, hey, spend less to make the plan look better. Sometimes we have these conversations when volatility picks up in the markets. Some people will, this was happening a little bit around election time. Some people were considering putting up a chunk of their portfolio in cash. And what we do is we show them the repercussions of doing that. We don't tell them, no, don't do it, stay in the market. I think that's more of like a low-level advice approach. We just show them, okay, if you go to cash, this is the long-term repercussion. But if you stay invested based on our framework, this is the long-term, this is what it looks like long-term. And then it becomes crystal clear to them during that meeting which path they really want to pursue.
So it sounds like you share the data with them. You help them walk them through the decision and help them step, because this is the thing about money. It's not just about numbers. It's also about behavior, emotion.
Yes.
Yes.
That's the hardest part about it.
So
the behavior part's the hardest part about it. Sometimes we say, it doesn't feel like we're financial advisors. We're behavioral coaches. Like, it's the behavioral part of finances sometimes it makes you just,
Yeah.
you don't even know what to say. It's some biases are very strong.
So this is interesting because we're talking about uncertainty in the decision-making process. It sounds like you do a really good job sharing the information with them, helping them make an informed decision. What if your client's leaning in a direction where you're like, your gut's telling you this really isn't something that you should do, or you really have concerns about it, but they're still kind of leaning that way? How do you approach that? Do you let them just kind of do their thing? Like, how do you maybe respectfully, professionally, as a strategic partner, maybe push back a little bit? Or do you just kind of let them go?
Yeah, and so I don't want to sound like I'm contradicting what I said before, where we will educate our clients on the trade-offs that need to be made to kind of not only achieve their goals but have a more favorable retirement. But sometimes, we will deal with client situations where they might want to do something that's worse than suboptimal. I have a client situation that comes to mind. They live in a pretty high cost of living area, and they inherited some money, and they wanted to stop renting and buy a house in that high cost of living area. And this was during COVID, so prices were being bid up pretty high. So we already knew going into the conversations that they're probably going to be paying a premium, but what they were looking for and what they were considering was all over the place. At one point in time, it was a duplex that they could rent the bottom floor out of, and they would live on the top. And pretty much most of what they inherited and then some would have been wiped out, all from one real estate transaction, which, my role in that was to tell them, hey, it's too expensive. You're buying too much house. I understand that there's the income component to it, but you have to think long and hard. Do you really want to become a landlord? And then the second part was showing them in the plan, saying, if you tie up all your money in one asset, real estate, which is not a liquid asset, that's not going to be something that funds your lifestyle. You're living in it. This is what it means for you long term. This is how much more you have to save. Basically, what I was able to show them through the retirement plan is that if they spend that much money on a house, it's going to, for the rest of their life, put unnecessary pressure on them to basically replenish those assets so that they can retire when they want to and live the lifestyle that they want to. It became crystal clear through conversations that spending a sizable amount less, but still having a very nice house in that high cost of living area was the logical thing to do. And that's what they ultimately ended up doing. And I can tell you right now, just from doing the financial plans, that conversation comes up often. And I consistently hear, thank God that we didn't buy that expensive home. So that's just one example that comes to mind.
Yeah, I love that. All right, let's get a little bit more into the nitty gritty. Now, I want you to put your humble hat on and brag about yourself for a little bit, which is something that I admit is an awkward thing to do.
Very.
So what is something that you do for your clients that takes a significant amount of time, but they'll never see or know about?
I probably get myself too involved, to the point where it's almost like OCD. Like and this probably stems from my first job out of college. Like I said earlier, working at the large firms, you learn how they operate and you learn how confusing it can be dealing with them. And so just this, it's a small example, but something we face often. Let's say a client's retiring and they have their retirement plan at Vanguard. I will typically volunteer to call Vanguard, go through the different departments, find the right person, conference in my client, get permission to speak freely with the phone representative at the company, really just to figure out, okay, hey, what's your process for rolling this money from the 401k? My client's retiring and they want to put it into an IRA at a different firm. That's something that they could do on their own. It's pretty straightforward, but I look at it and I say, hey, it's confusing. They're paying us for a reason. It makes no difference to me. Let's just get the information right the first time around. And if it's a form that needs filled out, I tell the client, email me over the form. We'll fill it out for you. We'll FedEx it directly to the firm, get the money sent directly to Schwab, which is where we hold our money. So again, it's a small example. Do you need to go that far with it? Probably not. Do the clients know that, maybe most advisors aren't doing it that way? Probably not. But I just like to make sure that it's done right, and I don't feel right telling somebody, hey, go and do this and then get back to me, and knowing they might get confused somewhere along the way. It just doesn't feel right.
Yeah. So you're much more boutique and hands-on with how you approach these things.
100%. And, Ron
it's
and
a different experience. Yeah.
Yeah, 100%. I remember working for some of the large firms. You were measured with, how many clients you talked to a day and how long you were on the phone. And here we work with, probably 130 families. We're managing north of 250 million. And we are very well staffed for that amount, for the amount of households that we work with. The benefit to the clients is that, hey, we have the capacity to work with them, and we have the ability, and we never want to lose it no matter what size we grow to. We have the ability to go above and beyond to make sure that we're making their lives easier. We're not making recommendations and complicating their life. That would be a situation that you want to avoid at all costs.
Yeah, absolutely. That's actually an interesting point. Maybe we could unpack that for a little bit. There's larger firms, smaller firms, larger financial firms, smaller, more boutique firms. So larger firms like, some of the larger firms that you mentioned that we all know. And I don't want to say small because that connotates, I think, lack of impact when it can be the opposite. I think boutique's probably a better way, more hands-on. What are some of the differences you think between working with a large firm and a smaller, more boutique firm like yours? Some of the larger differences. Good, bad, or indifferent?
Yeah. So what the benefit is, it's a known, there's brand recognition, right? It's, there's a sense of comfort with the brand recognition. Everybody knows, Vanguard, and for the most part, they associate safety with a large name like that. It's been around for a long time. And that comfort aspect, like you need to be comfortable. That's what we're doing for our clients. They need to be comfortable in retirement. We would never want somebody constantly stressing after they've stopped working. That's not a good situation. Nobody wants to be in that position. The other side of things, what I've seen at the large firms is two things come to mind. So one is advisor turnover. You've got to think like, hey, these advisors to these large firms, climbing the corporate ladder is a real thing. They might be in one segment now, but their goal might be to climb up to a higher segment and work with, different clients long run. And that might mean that they're not taking their book of business with them as they progress professionally. And so then a new advisor's coming in and having to get to know a pretty large book of business rather quickly, which I think is a difficult
By book of
task.
business, you mean the list of clients that advisor has been serving? just
Yeah,
in case.
yeah, yeah.
Yeah.
And some of those, some advisors at the large firm, like I remember when I worked down in Virginia with Schwab, our advisor who had been in the office the longest for the longest period of time, one advisor, he was managing about $1 billion by himself, which is a large book of business for one advisor. And so it's, if he ever went somewhere else or something like that, that could be a pretty uncomfortable thing, especially since some of those clients have been working with him for a very long period in time. So the advisor turnover portion or piece is certainly something to consider. And, what you have to think is, would you be comfortable if that happened? At our firm, what we do is our advisors are owners of the firm. And so what that means is that that really either fully eliminates or drastically decreases the advisor turnover. So our advisors are here to work with their clients for very, very long periods of time. And the whole thought process with that is that as you get to know somebody on a personal level, you get to know them, person to person, your planning becomes better because you understand who they are.
Whole context of everything. Yeah.
Yes.
So you're not just having conversations with them, you're likely also meeting members of their family or extended family.
100%.
Those sorts of things.
A lot of
Getting to
times,
know their personalities so that you understand the nuance and can read between the lines on certain dynamics and things like that.
Yeah. If one of our clients has an eye for, cars, we know which type of cars that they have an eye for, and when they come in, we're making jokes and saying, "Oh, what are you seeing on the roads now that you like?" Like it's something small, but we know them, and we know that might show up in their plan, and they might always have a goal to be buying a new car, and that means that again trade-offs need to be made in other areas so that they can do that because it gives them fulfillment.
Sure. So they're thinking about buying a beach house, but hey. Also, next year, they're going to be looking to buy a new car, so you gotta
exactly.
Yeah.
Exactly. And the other thing that comes to mind is it's at the mega firms, sometimes you get the feeling that it's more of like a one size fits all, not like completely tailor made to the situation. So you can run the risk of seeing some I don't want to say necessarily advice, but there might be more of like a cookie cutter strategy, whether it be like on the asset allocation, how much do you invest in stocks and how much do you invest in bonds? And again, I'm not saying that this is at every major firm, and I'm not treating this as gospel, but the example that I'm using is that maybe at the mega firms, because time and capacity could be an issue, they might look at like, okay, based on your age, this is the optimal allocation. But with us, what we're doing is we're actually looking at the retirement plan, we're looking at their goals, and we're looking at their resources, and each plan and strategy that we recommend is 100% personalized based on that specific situation and nothing else. So we could have clients that are in their 70s, and again, their resources far support their needs. They're very comfortable with the risk. Maybe their goal is to maximize their estate. Their portfolios might look pretty aggressive. Their portfolios would certainly be more aggressive than just the general kind of investing 101. Hey, go into a 60% stock, 40% bond portfolio at retirement.
Yeah.
And then, we're using the time that we have and the resources and the expertise to look at all aspects of what we do on the investing side, the retirement planning side, and the tax planning side, to make sure that there is a clear value exchange there, to make sure that we're differentiating ourselves. Not in a foolish way where we're, betting on the market as an example, but, spending time and energy to make sure that our proprietary stock strategy is running at the best in the best possible way that it can be.
Yeah, it's highly nuanced. It's
exactly.
Nuanced. Yeah. Well, I think there's pros and cons to either choice, and that's something that is the responsibility of the individual to think about and consider when they're making a decision. So,
yeah,
okay.
And the boutique firm. It's not not everybody's going to love it. Some people are, but not everybody will. And like you said, I mean, I agree with what you said. You have to kind of think, what are you comfortable with? What do you want? And I think by thinking about that up front, it will naturally kind of put you on the right path in terms of what types of advisors you're talking to from the get-go.
Absolutely. All right, so let's do this. We're working towards the end here, but I want to understand a little bit more about maybe your initial process. So, like, let's say somebody becomes a client today. What literally happens week 1, week 2? And what does it look like to work with you over the course of a calendar year?
Yeah, so what we do is the onboarding process is kind of like a housekeeping. It's getting the investments consolidated under one roof. It's making sure that they have all the functionality on the accounts that they need. So a lot of our clients are either nearing retirement or recently retired. And so it's up to us to replace their paycheck. Their employer's no longer doing it. So we're making sure that the bank accounts are linked so that money can flow in and out of the accounts. We're making sure that their beneficiaries are set up. That way, God forbid something ever happened, their money is going to somebody that they want it to go to. It's not going through, probate. That's what we're spending our goal is to have onboarding done for each client in less than 30 days. So that's what we're handling during the onboarding process, a bunch of clerical kind of housekeeping things that are important. From there, what we do is we have a new client review meeting. And the purpose of the new client review meeting is to reiterate who their primary advisor is, who the secondary advisor is, explain the role of everyone in the firm. So who do they contact with these types of questions? Who do they go to for these types of questions? And from there, it's really just a matter of making sure that they are put into the correct tier based on their, like a service tier based on their stage in life. So our planning approach might look a little bit different for somebody that's still working versus somebody that's retired. And the time of year we might meet with them might look a little bit different. So once our onboarding's done, once we've had the new client review meeting, then we're kind of off to the races, and we're meeting with our clients proactively twice a year. And that's, first quarter, second quarter, third or fourth. And it's kind of a routine maintenance from there. Whenever volatility picks up in the markets, we'll be sending out letters to our clients on a proactive basis, just inviting them to schedule time. That way, if they have questions or concerns about some of the things happening, they can reach us. But not everybody takes us up on that. But at the very least, we're meeting with our clients twice a year.
Excellent. And that way, you have your financial plan with them. If anything changes, you can make updates and adjustments, and you're also always
exactly for
questions.
And the scope of the meetings are a little bit different. For example, retired clients, one meeting is going to be more focused on the retirement plan or the retirement income plan, which is, like I was talking about earlier, that's tracking the progress towards their goals. And the second meeting is going to be very focused on tax planning. So we create not just point in time tax minimization recommendations, but it's really multi-year tax plans that set them up to minimize taxes over their lifetime. So the second meeting, typically later in the year, is more focused on tax, and we make sure that we're giving investment updates, how the strategies are performing, how they're doing relative to benchmarks. We make sure that we cover that in every meeting that we have with clients.
Excellent. So they're never left wondering what's going on. I love that.
We over communicate.
Nothing wrong with that when it comes to money.
No. People
All right,
need to
Ryan,
know what's going on.
All right, man. I appreciate you coming on. Last question. For someone thinks that they might be a good fit to work with you, what should they do next? How can they get in touch with you?
Yeah, so they can reach out to me directly. So it's Ryan Wyatt at wyzewa.com, or they can call me at 724-271-7019, or they can even look at our website and they can take the first step in the prospective client interview process by booking, that good fit call that I was talking about earlier, which is just a non-committal 20-minute introductory call to explore a fit between the help you're looking for and everything that we do from our clients. And again, if you go to our website, you'll see very clearly how to take that first step.
And to anyone listening, we will put links to all of that information below the episode. All right, Ryan, been great to chat with you. Been great to get to know you. Thanks for coming on.
Greg, I appreciate it. Thanks for having me on, and I hope you enjoy the holidays.
You too. My pleasure.